Hemindra Hazari now joins us this morning. Hemindra, good morning. What do you make of this merger? Swap ratio has come out, timeline has come out. How do you think the dilution of 1.8% in SBI will be taken?
So I don't think there's any major surprises here apart from one or two subsidiaries where some minority shareholders may have been a little upset. But mind you, the market has always been valuing SBI on a consolidated level anyway. So from a pure valuation point of view, they've always been looking at it as a single entity. However, what this merger does is that it will be adding on some 73 odd employees to SBI, as well as some 6,700 branches. Now, this to me is going to take some time for SBI to digest. And even though they follow very similar systems on the IT platform, even employment, promotion policies, integrating such a large amount of staff and so many number of branches is going to take some time to digest. And I just hope it does not lead to any problems where, the growth strategy of SBI as a whole gets impacted.
Right. If you just look at the points that you made about cost integration, about employee integration that will happen, by the time it starts to pay off, there'll be a lot of one-off expenditure that the bank may have to incur.
Yes, because, some of those pension schemes and provident fund schemes of SBI have to be extended to the SBI Associates. So there is going to be some one-off costs. So to me, that is something which SBI's P&L can absorb. It is I think the problematic areas will be the integration of the 73 odd employees, 73 odd thousand employees, because that is a huge number by any standards. And even integrating 6,800 or 6,700 branches of the associates. Even though SBI is a system-driven bank, it has been one of India's largest banks. Still, to digest this in one shot is going to have major issues. In an environment where senior management of all banks should be focused towards NPA recovery, now SBI senior management's focus will get diverted towards this integration.
Right, but they were always a part of SBI. So don't you think that a lot would have already be similar between these subsidiaries?
See, out of all the banks for consolidation, this is the most amenable because, as you said, a lot of the senior staff of these associates come from SBI. They're very similar promotion patterns, employment standards. So this is the most amenable to merge. But given the time frame that they've been given the sheer quantum of the employees and the branches that have to be integrated in one shot, and even if you're a homogeneous, just to integrate them to rationalize their promotion, future prospects is going to lead to a problem. And therefore, I just hope that it does not, divert SBI's overall growth strategy.
What does it do for SBI, Hemindra?
If you go by the government, who has been this is really a forced merger in my view. It just makes the balance sheet size bigger, and this has been the contention of even the earlier finance minister, Mr. Chidambaram, who wants to show, that Indian banks have to have a certain size for them to be internationally recognized. Now, mind you, to me, this whole idea of size has never been a very positive aspect because you've seen what's happened to Citi and some of these large Western banks. Now they've become, too big to fail, and now there's talk of them, slimming down. So to me, this obsession with size should not be the main driver, and one should really look at your business strategies, whether that is, amenable to this type of kind of merger at this particular point in time.
If you had to compare the smaller subsidiaries, 3 of them are listed with the SBI as such, and look at its balance sheet quality, how would you compare them? Because some of them are obviously at a discount, some at a slight bit of merging at a slight bit of
these
premium.
Associates, have had some issues of asset quality because sometimes they've had, chairmen or MDs who have really gone on a credit expansion spree, and that has had some costs. So you're seeing some of these associates have asset quality as an issue. So some of their NPAs are higher than SBI, and therefore, they will have some issues. But I don't think that, to me, that is surmountable. The issue really, again, as I say, is going to be of, integrating this large mass of people and of branches.
All right, let's move from SBI because we'll obviously right now even the government has to give a go-ahead. I guess, as you said, that if the government has mandated it since the time of the UPA, then obviously that go-ahead should come through. I actually want to ask you a little bit about what you made of the inflation numbers, because I don't think you have appeared on the channel since then. 6.07%, and most people say it's a blip. Do you agree it's a blip?
See, to me, the issue not is whether this is a blip or not, whether this is sustainable or not. You know, like even Jayesh Mehta was saying that their view is that it is not sustainable. To me, really, the issue should be is what is causing this inflation. Is it a demand pull inflation or is it cost push inflation? Because once you've identified that, then you can have a solution to it. Because in this total environment, both globally as well as in India, where there's hardly any demand, where IIP refuses to go over 3%, it is very clear that this type of inflation is a cost push inflation. And the point is, how do you combat a cost push inflation? You cannot do so by keeping interest rates very high. Because if you are saying that, you know, it doesn't matter, which is, you know, the view of present economists, that it doesn't matter whether it is demand pull or cost push, as long as inflation is rising, it has to be put down. Then the thing is, how do you put it down? And it cannot be a cost push inflation, cannot be directly controlled through monetary policies. It can be only controlled indirectly by keeping interest rates high and therefore even squeezing consumption further, which will then reduce your inflation because the overall consumption needs of society becomes much less, which is actually a, you know, very adverse form of austerity you're imposing on the people. So if this is your technique, then you can continue to see that demand will, you know, get squeezed further. But if you say that these are cost push and therefore you require non-monetary efforts to see where the bottlenecks are and to address them, then there's no, you know, you can even reduce interest rates for that matter.
I would like to understand from you what you make of the idea that a good monsoon will automatically lead to lower food prices. You know, because we haven't had two droughts and a good monsoon for 10 years or so, or even more than that. The world has changed. Indian agriculture has changed since then. Input costs have not really gone down just because monsoon comes, my input costs go down, right? Because the amount we are putting, farmers are putting into fertilizers, into seed, into various kinds of things, the kind of indebtedness that they have, which they'll have to pay back, that is not going to change just because it's going to suddenly rain more.
I'm very glad you've raised this issue because normally no one looks at it. You see, if you have to have lower agricultural prices, you have to have more government intervention in this whole process. But in this current environment where any government intervention is looked upon as bad, and this whole idea of less government and more governance, according to me, you require government to play a more decisive role. Therefore, you can, by controlling certain agrarian input prices, so therefore there can be higher income to the farmers. If you can raise agricultural prices, you can lead to an increase in demand, and you're not really linked to global demand in that sense for a revival. So in my view, yes, if you have a good monsoon, of course it's going to be better for agrarian and rural India. Mind you, 50% of our employment happens in that area. But it has to be, you know, there has to be a dual strategy of not just being dependent on the monsoon, but seeing to that the agrarian incomes are increased through lower input prices and better prices even for agricultural commodities.
No, because again, let me be a little more layman-ish, because that's, you know, ask the dummies question and ask you to answer that. Because we have seen in the past, even in the beginning of this year, when there was a glut in tomato production, farmers were coming and throwing it on the street, on the highway, because they were not able to sell it for 1 rupee a kilo. For us to say monsoon is going to revive and increase production and therefore farmers are going to earn more, is, to, in my mind, a little simplistic, because at the end of the day, it is the RTA who controls how much the farmer is going to get. Number one. Number two, our reporters, when they go and, you know, I'm talking about our news channels, when they went and covered what happened to farmers during the rain shortage that happened in the beginning of this year and the previous year as well. The entire whole hailstorm problem that we saw in the beginning of this year. Then the thing that they found is that a farmer takes loan from a bank or an NBFC, finances a particular crop and then sells it and pays the loan back. Now, all of them are indebted. They have to pay that loan back from the particular crop that they're going to do. When the crop goes up, the prices crash, they cannot pay back. When they don't have a crop, they find it difficult to pay back. So it's not that simple that we look at monsoon and think farmers are suddenly going to be so rich, they're going to come and buy 2 soaps instead of none.
No, you hit the nail on its head. And therefore, you require government intervention, because what typically happens in agrarian India, it is the middleman, the adhyas, as you have spoken about, who really catch up all this surplus, and there's hardly anything which goes to the farmer. Therefore, the government has to intervene, and therefore, I'm a firm believer that the government should, instead of relying on market forces, but what is happening, as you very rightly pointed out, if you leave it to market forces, it's only these middlemen who exploit everybody. So you have to have the government step in to guarantee, a fair price to the farmers where they will be left with some surplus. And if they were to intervene in this manner, you will see greater demand for all goods and services. But unfortunately, under our political dispensation, which is under even both the Congress or the BJP, they always believe that, if you leave it to the forces of the market, you will get natural equilibrium. But as you've seen and as you have pointed out, that's never the case in such matters.
That brings me to slightly stock-specific questions, Mr. Hazari. And, there's a lot of bet now going out on consumer non-durables, consumer discretionary, perhaps even FMCG, which serves to rural economy, tractors, seeds, fertilizers, everything which is believed that this is now the good monsoon, this is going to recover. When you try to run just a basic, Excel sheet and try to bring out which ones are cheap, then you find that everything is trading perhaps at a standard deviation of 2 away from the historical averages. How does one even talk about buying any of these consumption stocks?
See, you can talk about this even for the entire Indian market, or for that matter, the entire global equity market, which essentially is this flood of money. And that is really the call everyone should take. Will this flood of money continue or not? Because that determines your valuation. It has really nothing much to do with the fundamentals. Another point is that, what you said, that, about 50% of the rural households are indebted. And what we have seen since 91 is that the banks and the institutions are playing a lesser role, while it's the money lender which charges very high rates of interest which are playing a larger role. So that is also squeezing all their incomes. So again, you need your state banks, you need the private banks to be directed by the state to increase their loans to marginal farmers and to the agrarian community if you want to see a surplus of income. Because once you get a surplus of rural income, that can lead to a more widespread demand and more sustainable demand for a lot of your consumer, durables. But unfortunately, we are not seeing this at all, because in this whole period of reform, it has actually led to the withdrawal of institutional finance from the small and marginal farmers, and only goes to very large farmers.
Okay. Hemindra, middle name Keynes Hazari. Let me ask you a question about about liquidity, then global liquidity. One would argue from a slightly global political perspective that international banks are never going to let finance capital down. They're always going to work, central banks across the world, they're always going to help finance operate. Now, therefore, global liquidity will continue. We had heard about global liquidity, all central banks thinking that we did a terrible thing when subprime happened, and now we are going to change our ways. Everything has come back to square one, right? More or less. It has a different look. It probably wears different clothes, but it's actually back to that. So I would actually argue that global liquidity is here to stay, and therefore all our PE multiples, etc., have to be completely recalculated.
No, that is correct. But the point is, can it continue indefinitely? Now my issue is that if there is any reversal of liquidity for any point of, any reason, then there are no fundamentals to support the market both globally as well as in India. And, as you very rightly pointed out, central banks, they're always very concerned with inflation and with wages of industrial workers or workers by and large going up. But they don't seem to be, they seem to suddenly become very silent when it comes to asset price inflation or the inflation of the stock markets. Now, even, Governor Rajan, for all his talk about CPI, I very rarely, hear him mention about the bubble which is taking place in the equity markets, or like the kind of P ratios that the market deserves at this point in time. So there is a kind of collusion, as you rightly pointed out, between global financial capital and central banks, the leadership, because one, that happens to be a revolving door where a lot of the senior people of the central banks, they come from the private sector, from global financial capital, and global financial capital also tends to be very big donors to the political parties which govern, as in the case of Hillary Clinton. So therefore, as you said, the global liquidity can continue, yes, but the point is, at some level, some rationality has to dawn on the market, and if and when that dawns, then you can see a total collapse of the bubble.
From Keynes, right? That is where you seem to differ from Keynes, because you are talking about the long run. I guess
Keynes also, mind you, he spoke of the liquidity trap, that you can have huge liquidity and there will be no genuine growth, this is exactly what is happening globally as well as in India. There is liquidity, interest rates are low. Of course, in India they're not that low, but still, capex is not picking up at all.
All right, Hemindra Hazari, always good to hear your warning view. I guess that's something that our viewers really need. Thank you. Thank you for coming in and joining us on this show. Pleasure talking to you as usual.